Hey everybody, welcome to another episode of The Executive. So excited to be joined by Cara Morphew, who's a partner at Sweater Ventures, who just launched yesterday. Sweater is giving everyone access to venture capital, which is a really big deal, and we'll get into why that's so important. Cara, so good to have you here.
Thanks, I'm excited to be here.
So typically, to get into venture capital, to invest in a fund, or to invest on your own, you've got to be an accredited investor, right?
Right.
So I think on average, that's like you got to make $200,000 a year over consecutive years, or have $1 million net worth.
Yep.
It's a crazy rule that was invented a long time ago,
Yep.
and otherwise you
Very
can't
old school.
invest in the asset class, which has been a really profitable asset class over the last 10, 15, 20 years. Sweater's totally changing that. Can you talk to what you guys are doing to give everyone access to venture capital?
Yeah, so essentially like the best way to describe what we're doing is we're a fintech platform that supports a venture capital fund. What I mean by that is we have an app and it allows for non-accredited investors or accredited investors to come onto our platform and invest directly into our fund. So there's kind of comparables in other markets. Think Fundrise for the real estate market. We're doing that for the venture capital market. So we just launched. You can download our app. The minimum investment for anybody is a $500 investment. So it's pretty low barriers to entry. And we've had like a wide range of checks as well. We have some family offices that are looking to invest in the fund or have, and then we have all the way down to your normal day-to-day retail investor doing the minimum amount of $500. So it's super exciting. It's just a way for us to open up the asset class and give more access, in addition to providing more education on kind of what the private markets can offer and how you should look at these types of investments.
And can you explain, so when they're investing in Sweater, what are they investing in?
Yep. So just like a traditional venture capital fund, you're investing in our Cashmere fund, which is our flagship first fund. Just like a normal LP who would invest in, a $50-100 million fund, you're investing into Sweater's fund, and then we have a team of professional investors who actually go out and deploy that capital on behalf of our LPs or our members. So instead of doing like a Republic model where you're choosing deal by deal and investing deal by deal, you're investing into our fund, our portfolio, and then we're deploying that capital on your behalf.
And is there a reason why you're doing it as a fund instead of doing it deal by deal?
Yeah, so I think the best way to explain this, I think that there's certainly value in a platform like Republic. I wouldn't necessarily call them a competitor to us, purely because I have a lot of people in my network who want to start investing, even accredited investors, want to start writing angel checks, but they don't really know how to go about assessing the deal and picking the right deals, right? So Republic has this huge platform with tons of different types of deals, but a lot of people get lost in that kind of platform and don't really have the education or experience to make the right decisions there. And there are a lot of venture qualified deals on those platforms, but there are also deals that might not necessarily be venture qualified. And so what we're doing is we're making investments into venture qualified deals who also might not go to those platforms to promote their investment. They're typically going to traditional VC funds. So these retail investors don't actually have access to those deals in the first place anyways. So we're giving more access to really hyper-competitive venture-backed deals, and then also helping our members understand the decision that went into that, why we made those investments, and kind of like an educational journey where they will be armed eventually to make their own decisions in terms of angel investments.
So for each company you invest in, they'll get an investment memo.
Yes.
The rationale behind each thing, so they can see the way you think, and then over the long term, they can see how that line of thinking plays out.
Yep, exactly.
It's really interesting.
So we actually announced our first 5 this week, and those are in apps, so people can take a look at kind of what went into that decision, a little bit more about that company, why we invested, and why we're excited.
That's awesome.
Yep.
And how do you get into companies? Why should a company take an investment from Sweater?
Yep. Really good question. So there's a bunch of different ways we get connected to companies. There's the more traditional way, which is, I came from VC and more traditional funds prior to this, sharing deal flow with, other investors, co-investors that we have good partnerships with, founders. Founders are like a great resource for us as well, because founders have a huge network of other founders as well. So that's a great source for us. That's a traditional source. Then we also have a scout network of about 100 scouts who, a lot of them are coming from, operating roles or product roles or development roles. And so they see totally different types of founders as well. And they're super excited just about the mission behind Sweater. So we have a wide variety of young scouts who might be earlier in their career, or a couple that are very late in their career and have access to a ton of different types of founders throughout their career and just are excited about what Sweater's doing.
That's really cool.
So that's really been awesome for us to see as well. And then the final way is actually through our members. So we have investors who also have networks of founders and are super excited about them, and so they can share those deals with us.
So just reach out to you and say, I love this company,
yeah.
You should take a look.
Yeah, exactly.
That's cool.
And then the value that we can bring to these companies is actually very unique compared to other funds, in that we have tens of thousands of LPs versus 99 LPs. Right. And so when we make an investment, like I said, we announce it to our member base or our LPs, and then they're in turn incentivized to either use that product or promote it to their network as well, because obviously growth in our portfolio inevitably means growth in their investment. And so there's kind of a flywheel effect there where we can actually drive growth for our portfolio companies.
So you have, when you get to a certain point, you have 100,000 LPs that are posting on their network saying, I love this company, or I love this product, you should buy it, and send it out to all their friends.
Yep, exactly.
That's powerful.
Yeah, we're super excited about it. And we're even in the early innings starting to see the excitement around our first 5 investments and how they're kind of going out and promoting those. It's a wide range of fintech through health tech, actually some B2B as well, and then traditional consumer products as well. And
will you guys ever do SPVs where someone can invest alongside you on a deal and be an angel investor on that?
Yep. So longer term, we're definitely looking at that option. Okay. Right now, we're focused on obviously being hyper-focused on the fund and deploying there, but really in the next year, it's something that's on our mind, and opening up access to co-investment opportunities, SPVs, so on. A lot of the family offices that we've talked to are super excited about that, but even down to, if you think of more traditional, like the Republics and other crowdfunding platforms, we could add that as well, so that non-accredited investors could invest alongside as well.
Well, you had a ton of people on the wait list, I think 70,000 you said.
Yep.
So clearly there's a huge demand for this. What's been the founders' reaction as you start talking to companies about what you're trying to do? What's been their reaction? Honestly,
it's been overwhelmingly excited. Yeah. They are, one, I think that there's a big passion for kind of democratizing or taking down a pretty old school industry. Right. So there's that entire side of it. But then also a lot of our founders are just really excited about what we can do for them that's totally different from their other investors. Not to say their other investors aren't super valuable in a very different way. They can be very much more hands-on in terms of going through different fundraising processes and hiring and so on. But they see us as kind of an added benefit where we can drive growth and kind of partner with them in a totally different way.
Well, you're probably also really valuable to a lot of other VCs, right? Because you see so many deals. You invest in probably eventually on a lot more deals than maybe a traditional VC would.
Yep.
So then you become a sourcing opportunity for a VC, right?
Yep.
And so then either way side of where the deal's going, right? So they want to know you guys and what you're investing in.
Yep, exactly. That's a huge aspect of it. As we continue to grow the platform, we have talked about having other VCs on the platform as well to see and get connected with founders through it. But then there's also the aspect of co-investing. And so, like I said, we don't take a lead position. So we've started to build a lot of really strong relationships with other investors who do lead and can be more hands-on and will co-invest alongside those investors. Or sometimes we'll come into a deal with another investor that isn't the lead, but they're trying to fill out the round and they're super excited about it. And so there's kind of the more traditional co-investing aspect of it, but then there's the value we can drive there, but there's also the aspect of us having this huge community and platform that they can utilize going forward. That's
very cool.
Yeah.
And what led you to Sweater Ventures?
Yeah, so this is something I've been super passionate about for a while. I am very passionate about investing in female founders and diverse founders, and could go on about all the issues within the ecosystem. But what I started to realize is, while there's definitely some issues at the VC level in terms of having diversity and the partner level and decision makers at funds, there's even more of an issue at the LP level. And so for me, I wanted to figure out a way where at my last fund, we might be able to open it up to a larger group of folks and a more diverse group of folks through maybe a platform like Republic. I was actually looking into that. And ultimately came across Sweater and saw that they were 5 steps ahead of me, actually 10 steps ahead of me in terms of that. And so it all just really made sense in the mission that they were driving towards and what I wanted to do and the impact I want to have in the ecosystem. So it was a perfect fit. I think there's a world where longer term we could potentially have other funds raising, other fund managers or emerging fund managers raising funds on our platform and opening up their fundraising process to everybody and retail investors. And I've already talked to quite a few fund managers about the excitement there. And so hopefully, that's something that we can potentially get into in a few years as well. There is actually the one other thing I should note is up to 15% of our investments are towards emerging fund managers.
Oh, interesting.
So we have a fund of funds approach as well.
Kind of what Founder Group has been doing the last couple of years.
Exactly. Yeah. So one of our first 5 investments was actually in an emerging fund manager. And so we're super excited about the angle there.
And what's the strategy there? Why invest in an emerging fund manager?
Yeah, so there's a couple different benefits. One, just driving towards the mission behind the fund and getting more access and more diverse fund managers access to having an impact on the ecosystem. 2, so for example, we just announced Gonus Ventures, $10 million fund. Lolita Taub is the emerging fund manager. She's awesome, very community driven. We can, one, co-invest alongside her into the investments that she's making, so it's another source of deal flow.
Got it.
And then on top of that, so we're not investing internationally right now. It's something that longer term we might end up doing, but we're focused on U.S. investments, and Lolita is focused on North American and Latin American investments. So it's another way for us to diversify and indirectly invest into international markets.
And someone who knows that domain, knows the people, knows the community. Really smart. So you talked about giving everyone access to venture capital, but how do you get a lot of that? People don't know about venture capital, right? And they don't know whether that's an asset class they should invest in, or is that something they should invest in every month? How do you become known with a lot of people that just don't even know about venture capital?
Yeah, this is a really good question. So it's probably a better question for our marketing team, but they do an awesome job. So we have been marketing through a lot of different angles. It's easy for a lot of people within the ecosystem to hear about us, just purely based on connections and VC Twitter and so on.
Right.
But we're trying to go through kind of partnerships through different social media platforms with different kind of influencers, call it, or stakeholders who have very different audiences. So we might partner with an influencer that has a large female following, and it's more traditional, or it's less on the finance heavy side, and it opens up kind of an educational aspect to them and that following on hey, are you looking for, I have a lot of women in my network who are starting to make investments themselves, and they're trying to figure out angel investments or private investments, and they're trying to figure out what the best avenue for that is. And so we're trying to hit that kind of user where they might not know enough about the venture asset class, and that's where our educational content and videos can come into play. We're really trying to plug into a lot of different, a wide variety of influencers and partnerships that can really drive to a very diverse group of people. Does that make sense?
Yeah, it makes sense. It's really interesting because you're trying to give everyone access to the asset class, but you're also trying to train people to be their own investors and think that way. Why train people? Why educate them to be their own investors?
Yeah, so this really comes back to the mission behind everything that we're doing. Jesse, our founder, is he started the fund, or he started Sweater because he was initially going to go out and raise his own venture capital fund, but he wasn't an accredited investor himself. Right. So he actually couldn't do it because obviously he
couldn't invest in his own fund.
Yeah, GP commit. And so it was kind of really backwards in the sense of what he was trying to do. And so he went out, and he also has a public policy background. And so he went out and made it his mission to figure out how to do this and get more access to people who aren't accredited investors. And so for us, like, a big part of it is getting people to the place where they're confident enough to invest in a lot of different asset classes and make their own decisions there. And it doesn't mean necessarily that they won't invest in us going forward, but if anything, I would hope that it would mean that they'll continue to invest in us and then also make, their own decisions on the angel side or in different asset classes as well. So we see it as just something that can really impact the industry and the ecosystem, and break down some of these traditional barriers that have long existed.
And you've been trained in this industry for a while.
Yep.
So like people that are learning, what are the things that you've learned as you look at companies and trying to figure out whether this is a good investment or not? What are the things you're looking for? What have you found to be the good indicators?
It's a really good question. So for us, because we're focused earlier stage, I mean, we will invest technically anything from pre-seed through Series B, but seed Series A is really our core right now. Obviously, that may evolve as we become a bigger and bigger fund. But for us, having a founder that's the right founder for that type of investment, I mean, for any individual company that we look at, we're probably seeing 5 to 20 companies that are almost exactly the same. It's crazy how much you'll see repetition as the more time you spend in venture. There's kind of cycles of different types of trends. I mean, I'm sure we'll see some competitors following us as well from the startup angle. But so it really comes down to who the founder is, why is that person the right person to actually execute on that problem and solution that they're coming up with, and who's the team around them, right? So it's really interesting and core to have a strong founder or co-founder team, but how are they going to attract a really solid team around them to actually grow and scale? And then the second thing that I would say is top of mind is just having a big enough market opportunity. So it can mean a lot of different things. We don't necessarily have a set number that it has to be. You have to be above 3 billion. Some funds do have that.
Right.
For us, we're more so looking at like how much white space is there in that market. So is it a market that might be a little bit smaller, but this company has a great opportunity to own a good portion of that market, or is it a hyper competitive market but a massive market opportunity where there's not going to be one winner, one
it's not one winner takes all.
So those are really the two top concerns or like areas that we really dive into immediately. And then beyond that, we're looking at go-to-market approach. How are they going to scale? What are the deal dynamics? Obviously, that's a component of it as well. And what are they using the funding for? Have they thought through if they really need to take on funding? We have a lot of startups that come to us that we actually educate on kind of alternative financing options too.
They're not a venture capital type company.
And they don't necessarily know. I think in the last 5 to 10 years, there's been a lot of buzz around like success as a founder means raising VC money.
Right.
But the reality is there's a lot of really, really great sustainable businesses that don't take on venture money, and it's much more, and they get acquired or they build it into a very profitable company, and it's much more advantageous to the founding members or founding team members at that point.
And so you're willing to tell them, we don't think this is a venture capital business, we don't think you should take our money.
Right, yep, exactly. Wow. Or in some situations we might say, we agree that you need a little bit of funding right now. We're down to back you. But as you think about funding going forward, we want to help you find alternative financing options. This is actually kind of big in CPG if you think about it. Right. Because if you look at the historicals of exit opportunities within consumer products, it's a lot less than a SaaS business. But it doesn't mean that a founder can't make really, really good money on those businesses. They just have to be a little bit more strategic about their financing options.
Well, it's interesting that you mentioned the two things of like what you're looking for in a company. One of them is obviously the team,
Yep.
which makes it hard if you're just investing on a platform deal by deal and you don't know the team,
Yep.
which sounds like a competitor potentially does, where a retail investors, they're trusting you to know the team and make a decision off of them,
Yep.
right? Otherwise, how will you ever meet the team for all these like regular retail investors?
Right, exactly.
When that's the main thing.
Yep.
Because a public company, right, all the financials are out there, so you
Yep.
can kind of make your own read. But in private, you're just going off of people.
No, completely right. And it's kind of how you might think about, the trend of SPVs. There's typically somebody who's managing that process
Right.
and taking kind of the lead position and pulling together that SPV. And you're
trust them.
trusting that person has talked to the founder and does have a good relationship and has assessed, the viability of the team and what they can do. And so it's really similar to that type of model and them trusting us, or a traditional fund as well, but them trusting us in making the right decisions and really vetting out the deals that we're looking at.
So it sounds like the vision is really big. What is the vision to be global with tons of different types of funds for every industry? Like how big is your team's vision?
I mean, we have had a lot of extensive conversations about this, and ideally, yes, we can get to that point where we are global and we're doing more international investments as well, and we have multiple funds and thematic funds, and we have the opportunity for other emerging managers to come onto our platform and raise and so on. Right now, we're focusing on crushing it with this first fund, but these are definitely areas that are top of mind, and we're hoping actually won't take too long to get to, especially with international investment. That's definitely something that's very top of mind for us. We've already started to talk to scouts in Israel and Europe and Asia, and so that's something that hopefully will be more of a 6 to 18 month time frame, and then some of the other product features and ideas there will be a little bit longer term.
That's really cool.
Yeah.
Well, we're at the Colorado Venture Summit. What's that experience been like for you? What brought you here? Is it just to meet companies for potential investment? What brought you to the Venture Summit?
Yeah. So obviously, we invest across the entire U.S. We're not a fund who's focused solely on the Colorado market, but something that is important to us is we are headquartered here, and we do want to be involved in the ecosystem and growing the Denver, Boulder, or greater Colorado ecosystem, really. So we're really trying to get involved in more local events. So it's not just, there's so many benefits to meeting founders here and speaking with them one-on-one, but also meeting other funds and kind of ideating on how we could work together going forward and what events we can do and so on. So we're going to be doing a lot more of these events going forward and just trying to get really ingrained in the ecosystem and build up the Colorado ecosystem.
And is that where your focus is? It's really getting ingrained in all these different ecosystems?
Specifically me or...
Yeah, specifically you. Where's your main focus?
Yeah, so I'm the partner on the team, and so I'm kind of wearing a lot of hats right now. Right. But I do really want to. I came from the Chicago market. I was an investor there prior to this, and so. But I am passionate about Colorado. I grew up skiing out here.
Yeah.
Major driver to why my husband and I moved out here, and I do see the value of the growth that has happened throughout this ecosystem. If you look at 2021. As a data point, I think there was 6.5 or around that, 6.5 billion that was deployed in Denver, Boulder, Colorado. And that was just behind the Chicago ecosystem, and above that is the big guys. So I really truly believe this ecosystem can be a New York in the next decade. I think that there's so much value that we can drive throughout the really full Rocky Mountain region, and so that is something that's super important to me, but that doesn't mean I'm gonna just neglect all of the other ecosystems that I think can drive a lot of value as well.
So how do you personally manage all that, right? Because you're sourcing, and then when you're doing deals, you need to stay involved with them.
Yep.
And then you're trying to get more ingrained in different areas. There's so many different hats.
Yep.
How do you focus your week? How do you strategically manage all that?
Yeah, it's a good question. It takes a lot of, definitely working quite a bit right now, but in a really good way because I'm super passionate and excited about it.
Yeah.
What I will say is the team that I've hired under me is rock stars, and they help a lot with the sourcing diligence side, which is awesome. And I still have a wide network of partners at other funds that I continually talk with, and founders that I continually talk with, who I get really awesome deal flow from as well. But our team really works together, and we rely on each other quite a bit to get everything, to really see as many companies as we can, and give every company and founder access to an opportunity to submit their pitch with us. So it is a lot, but we have a really solid team, and I think we'll continue to hire a lot of amazing folks on the investment team. I'm super excited about it. And so, yeah, it's really just relying on each other and working as a team to move as fast as we can.
It's all about the team.
Yeah.
I love to wrap up with, like, being a bookworm. Like, is there a book that you always recommend, either to founders or investors? Like, what's been a favorite for you that you'd recommend?
Yeah, I mean, this is super cliche because it's promoting Colorado as well, but truly this is an honest answer. Venture Deals was one of the first books that I read when I was in business school and looking at venture. I came from the operating and tech side. I was at Uber in the earlier days, so it was like, and I started a company while I was in business school, so it was a really good book for me to read on the founder side. Yeah. And then when I went into venture, I read it again, and it was
total different perspective.
Yeah, exactly.
Reading it from
and
there.
So I think that book is really, really great for investors and then also founders as well, and kind of seeing both sides of the house. So that's one that I would definitely recommend within the space. But there's so many good books out there. I have a long list that I could share as well.
Well, that's a good point. It's really important for the founder to also know the mechanics of how venture works and what's being expected of them as part of this deal.
And it makes like the process more efficient for everybody, I think, because there's founders that are awesome founders, but truly just don't fit within our thesis whatsoever. So talking with us is not going to be beneficial for them. Yeah. And it's obviously not always the most fun process to go through. Fundraising can be exhausting.
It's a lot of interviews.
And so they're trying to like be as efficient as possible too and find the right fit for them. And so I think it's really good to kind of read that book and have it and then there's a little bit of the legal side too in that book. So it's a really good kind of well-rounded viewpoint there.
Since Jason Mendelsohn was a former attorney.
Yep,
that's
exactly.
Perfect. Yeah.
Yeah, and he's like, he adds, his comments from a legal standpoint. We wouldn't agree with this, but so yeah, it's a good one, I would say.
Great recommendation. Well, thank you so much for the time.
Yeah.
Loved hearing your story and really excited to see what Sweater does over the next 5, 10, 15 years. Yeah, appreciate it. Thanks, Cara.